Welcome to Office Hours at TradersPost for December 17th, 2024. I'm Tom Hartman, Marketing Manager here with Mike Christensen, Co-founder and CSO. We're here to answer your questions about using TradersPost to automate your trades. As always, we want to take TradersPost to the next level by making it the best automated trading platform for you and your trading needs. And for that, we need you, your feedback, and your questions. And we thank you for them. How's it going, Mike?
Doing well here. Interested in seeing what today's questions are.
Excellent. We have a nice roster of them. They span the gamut from simple to complex, so it should be pretty interesting. I did want to start off with one particular one that was asked a couple of days ago, which has to do with the Heiken Ashi charts and running a strategy on them. So I just wanted to bring up the idea here that there are different types of charts on chart types on TradingView, and there's the regular one that we're all normally used to for bar charts or line charts. But then we also have non-standard charts, or what TradingView calls non-standard charts, and that's where the time axis is not consistent. It's plotting it in a different way, and so as you might imagine, the Heiken Ashi chart is it looks delicious. Looks like this trend chart. It's perfectly charting the trend. It seems like if I could just buy when it starts to be green and sells when it starts to be red, and vice versa, I should be making a boatload of money. But what happens, Mike, when people run a strategy that they built on a regular chart on there? Well, they end up with problems.
Yeah, absolutely. And a lot of it is that the pricing information that you're generating that signal from just simply doesn't line up with the pricing information from a standard chart. So the non-standard charts are often confusing. We get a handful of tickets around that. Did you have a question that came up specifically on this one, Tom?
Yeah, and I just wanted to actually show here on TradingView what we're talking about here. So at the beginning or at the top here, we have a strategy that just a simple one that we built with on Blueprint on Thursdays. And so there's the VWAP strategy, and as you can see here, we have an entry price that shows up here for the buy signal. However, if we take a look at the strategy performance and we compare it to a chart that is a Heiken Ashi, you'll notice that the results are somewhat different. Now, there's a setting within TradingView on the Properties tab called Using Standard OHLC Values. And so what it does here is that if you check this off, TradingView will try to more accurately approximate the actual prices that happen on a real-time chart while you're on a Heiken Ashi chart. So you could be on the Heiken Ashi chart, and the results that you're gonna get could be more in line with what you're seeing on the regular chart. But you can see it's still different, somewhat different. Right. Yeah, you want to say something, Mike?
Yeah, I was just going to say, for those curious, OHLC is open, high, low, close. That's referring to the standard data that makes up a bar. which is a little different than how Heiken Ashi or even some of the other non-standard charts actually generate their bars.
That's right. So here the when if we're going to take a look over here, let me show it. Let's do it this way. Right now, this top chart is showing us the entry on the regular bar, and this one is on the Heiken Ashi one. And as you can see, my price entry over here on the regular one is 101.838, and on my entry over here is 102.076. So it's off because the strategy, for example, is trying to initiate the order at the opening of the candle, and the opening of the candle on the regular chart is different than the opening of the candle on the Heiken Ashi chart. When we switch this to use that option, we get a more realistic price where the price here is still is more in line with the price that we're actually getting on the regular chart. So first, I just wanted to point out that option, and second, I also want to mention that still it can be problematic when you're using a non-standard chart to trade. So that even though you're expecting perhaps to get results that are more in line, the reason why people are using the Heiken Ashi chart is that they're trying to get often they're trying to get that trend information, and it's actually better on a regular chart to pull in the Heiken Ashi information on the regular chart and use it there than the other way around. You end up in all kinds of weird scenarios where it's not the results are not appropriate. Depending on the complexity of your strategy, things can get really wonky. When you're using market orders, limit orders, if using stops, it can get really really crazy, and it doesn't even really help you with you know figure charts, Renko charts, all kinds of other non-standard charts. That option, so much better on a regular chart to pull in the information that you need on there, and you can get that information. There's indicators out there. There's methods and functions within PineScript that allow you to do that. But if you're if you're not a coder at all, I would recommend that you really focus on regular charts because you make your life a lot easier where orders are happening where you expect them to happen.
Yep, totally agree with that.
All right, so let's move on to some of the questions we got this week. First up, all right, so this is a situation I had in support. So I'm sending a trade signal to open a put position on Mara. However, when the trade executes, it adds to my existing put position instead of opening up a new one at a different strike. Why is that? So John explained to me that when you have a position that's already opened with an option, and you look to execute another trade, it'll add to your existing position. So if you had a put at, let's say here in this situation, it was at the strike was at 22, and then you're sending another request, and you're expecting now, oh, I'm going to have one put at 22 strike and another one at $24 strike. Well, that won't happen. It'll increment the one that's of the put that you currently have.
That's because we look at the option symbols by the root underlying symbol to count your position. So if you send another request, it'll add to the existing position that you already have open. However, it is possible for you to trade multiple strike prices on TradesPost, but you have to define all of those strike prices in your JSON message. So you would have to send an order for each individual strike price with the full symbol name of the options contract. So that would be something like SPY, and then the date, and then a P for put, and then the strike price after that. And that symbol can then be traded individually. You don't necessarily have to be limited, but it just requires a little more work on your part to decide which strikes you actually want to trade.
Excellent. Oh, I didn't know that. Good information. Next up, this is a broad question, but I just wanted to hit on it. Someone was asking on Discord, is it possible to send multiple limit orders at once?
Not in the same message. It is something that we want to explore in the future, where you can basically send an array of messages, or basically a group of messages together, and then they would all be executed concurrently. I definitely see the use case. I have a strategy of my own that requires sending multiple limit orders deeper and deeper into the book. So it is a good request, but it's not currently supported. So the way to do it would be to send each individual request independently. So you could create the same alert, let's say on a trigger of some kind in the strategy. One is for one limit order, one is for another limit order, and a third is for another limit order. And each one, relies on some modification of the price in some way to go either deeper down into the limit order book, or to maybe put a buy stop above or something like that. So you'll have to get a little bit fancy with the alerts and the conditions. But between letting you do that math inside the price, which is something we're going to be offering in the future, is formulas, and allowing you to send multiple messages, those two features will make your life a lot easier, but that's not going to be coming out until next year. So for now, you'll just have to send multiple requests to us.
And if you're sending those multiple requests, if we send in 15 or less, then I imagine we could send the whole batch of it. Like we could fire all the alerts at the same time within the script.
Yeah, 15's pushing it to try to execute all at once, and that largely has to do with the broker limitations. Many brokers have rate limits associated with their API requests.
I see.
So I would keep it even lower than that. Like try not to send any more than 5 per second. So what I would probably do is create the first alert for the first limit order, and then wait until the next bar to send maybe the next alert and the next alert and so on. Like create additional conditions that make it to where it doesn't create those limit orders unless there's a condition that fires to open them. That way you're not trying to send them all at once and potentially having those trades rejected by the broker.
I see. Okay. All right. Any lifetime plan in the works? Is that ever going to be an option?
Well, here's the way I look at it, and I think John agrees with me on this one. We are constantly making improvements to the application. Every day, every week, every month, there will be new features that get shipped. And ultimately, we don't ever really plan on raising prices. We might offer new ways for you to add to your plan. We have some a la carte pricing features coming up in the future. But the value that you're going to get out of the different pricing plans that we have will always be going up, meaning that we'll always be adding new features to the system. And sometimes you may have to pay a little bit more to access them, but ultimately the plan's pricing isn't really going to go up. So the plan is always to add as much value as possible within the TradersPost ecosystem. If we were to offer something like a lifetime price, it kind of diminishes the long-term value of the TradersPost product. And it sort of hinders our ability to continue to deliver a service that is, the best out there for automation and has all kinds of features baked into it. So I'm not sure we'll ever be offering a lifetime plan, but certainly offering some more flexible pricing and a lot more value in the future.
I guess the option of doing an exorbitant amount doesn't make any sense, because the whole idea is that you want to discount.
Yeah, I guess the price would be fairly high if it were a lifetime plan. Probably, yeah. I wouldn't even want to guess. I think the pricing structure as is starting to make more and more sense as time goes on.
Makes sense. Yeah, and there's going to be some changes coming up potentially that might make it even more flexible, and going in the direction of giving people more options of how to break down their account, as opposed to a one size fits all sort of idea.
Correct. Yeah, we're going to change to more of a product and pricing model where you just pay like a monthly base price, and then you can add different products to your account. So if you want 10 prop firm accounts connected to your account, you would just pay for each one individually, and you can just keep adding as many as you like. So that's what we mean by a la carte pricing, where it starts on a base plan, but that you can add as many additional features as you like. Sumit had the question, any planned discounts during the new year? Actually, prior to that, we plan on running a Christmas special next week. So keep an eye out for that. It'll go out through social media and email, of course, and that'll last until just after New Year's.
Great. Little, if you're watching office hours, you're getting a little sneak peek before the social media folks. All right. Is TradersPost compatible with Tradovate's group Copier? Short answer is no.
No, not maybe not in the way you're thinking. The Tradovate group copier, as I understand it, takes the trades of an individual account and can copy them out. I've heard people attempting to do this, but it has not had the success I think that they're hoping for. So the best way to do this is to use the TradersPost sharing functionality, where you can start with one strategy and then send the signal to multiple connected accounts on TradersPost. So what that would allow you to do is have 5 of your own prop firm accounts on your own Tradovate account connected to TradersPost, and then you can share that same strategy with other people, other users of the TradersPost ecosystem that can also connect all of their accounts. And then a single signal can control, let's call it 30 or 40 different accounts at the same time.
While we're talking about that, on the heels of what we were just talking about the different plans for next year, just throwing this out there. I would love to have a developer account where my client doesn't have to have a premium account for me to be able to manage their strategies on their account. I can. So I love the idea of being able to create strategies, create tools, and then basically I'm part of the whole process there for the customer all the way to the end of the execution. So then it's like, oh, well, just make sure you sign up at TradeStation, hook up here, and now literally from beginning to end, I can manage that, and I would pay a premium in order to have an account like that.
Okay, we'll bear that in mind.
All right, let's see here. The trade copier thing, just to mention, the reason I brought it up because I think some people are trying it, and what would happen is that only the first account ever got the actual trade, and all subsequent trades happen. So just to mention that.
Yeah, and we can't, obviously that's a product of the Tradovate ecosystem. We can work on our system to support you in the ways that you're looking for, and can build a more reliable, robust solution there when it's in our domain. But if you're trying to send the signal off to Tradovate after the fact and hoping that the copier works, we just can't guarantee the outcome of that.
Sure. Hi, I'm planning to purchase TradersPost to use with Tradovate, but Tradovate doesn't have a free API. If I use TradersPost, do I have to buy a Tradovate API as well?
No, you do not. I think we actually got this exact question last week too, right?
That's right. Yeah.
Yeah. So we have this in our documentation as well. Tradovate has this API service that you have to pay a subscription for, but not in the case of the use of TradersPost. Essentially, TradersPost is an application that you're authorizing use of your Tradovate account for. So you can connect your Tradovate account and you don't have to pay for the API service on Tradovate in order for that to work. You just have to have a paid TradersPost account, of course.
Excellent. When a feature such as bracket orders isn't available for a broker connection, is this a limitation due to the broker side, or would petitioning TradersPost make it more likely that that feature gets added?
Petitioning the broker would make it more likely that the feature gets added. So the limitations on bracket orders largely come down to the brokers themselves supporting that type of order type. If it's not currently supported by the broker, or it's like a partial version of that, then unfortunately we don't support it on our side. The moment that the broker does make it available, though, if we're certain that it is a feature that they have, but we're not currently supporting it, which can happen, then of course we'll do the work on our side to get that implemented. I think, for example, Coinbase might be offering bracket orders, and they weren't previously. So that's an area where we can make some improvements. And of course, if any other broker expands their offering to include it, we'll make sure to do that work.
Cool. Can I hook up 2 different subscriptions accounts to the same broker and just separate them by tickers? For example, if I have 10 total tickers I cover and I want 5 to do 1% take profit and the other 5 to do 0.5% take profit. Is the idea here that
tickers to cover 5 at 1 and 5? Oh, I see. Well, we need to clarify whether you're trading the same tickers. So I would caveat this to say you may run into conflicts if you're trying to trade the same symbols in 2 different ways in the same account. So for example, if in my first strategy I have a Microsoft trade and I'm trying to do a 1% take profit, and then I have another signal that comes in from Microsoft at a 0.5% take profit, that's going to conflict with my existing position in Microsoft. So if you're trading 5 different symbols in one account in one strategy, and then another 5 symbols in the other strategy, then you won't have this position conflict, because TradesPost manages your position at the broker account level, not at the strategy or subscription level. We look at your broker account, we look up what your positions are, and we manage the trade from there. So I would say that if you're trying to, trade different position sizes, you're managing positions through the TradesPost system in an efficient way, using our built-in feature set, you may run into some conflicts by trying to trade 2 different subscriptions this way on the same symbols. Now, if it's completely different symbols and they're not going to conflict, then yeah, you definitely could trade a basket of 5 tickers from one subscription and then a basket of tickers in the other subscription. Just be aware of your equity limits, of course, that you have enough equity in your account to cover all of those positions at the same time.
That's right. Yeah, I spoke to this person, and that's what they wanted: 10 completely different tickers altogether.
Got it. Okay.
Yeah, that's great. Okay, which IP addresses can I whitelist in Binance API?
So I updated the documentation the other day from this question. We are not currently supporting this on our existing infrastructure because we can't guarantee that our IP address won't change. And we wouldn't want to put you in a position where you set up the API key, and then all of a sudden our IP address changes and it's no longer working. So we will be moving to new infrastructure in Q1 of next year. And after that process is complete, we will have a list of static IP addresses that will not change. And at that point, we'll publish those IP addresses that you can whitelist with the Binance API. So in the meantime, unfortunately, we just can't support that feature on Binance.
Understood. Okay. Hey, so I have a TradingView strategy that I want to run on Kraken. That strat involves both longs and shorts. Is there a way I can get the shorts to work even though Kraken doesn't allow shorting? Like, can I have BTC in the account, and for shorting, it just sells the BTC for USD and then buys it back when the short closes, or any other sort of workaround? Or am I cursed to only get the spot longs? Also open to different exchange if anyone knows one in the US. So I just wanted to bring this up to mention this comes up in like different flavors. And the idea here is that some people have a system where it sends a signal and there's an implied condition for why that signal is being sent, but we're responding to the message that's being sent to us. So if some system has a buy signal or a shorting signal, let's say, and you send it over that you want to sell a position, well, we'll sell that position. We'll follow whatever message is there. So I just wanted to bring this up because it happens again and again where people go, hey, is it possible for me to do something that's completely different than the strategy or indicator that I'm using at TradesPost?
Okay, I'm glad we provided that context because I wanted to confirm that was the expectation. So if you have a strategy that appears to go long and short, and it let's just assume for simplicity here that it's just a reversal strategy where it goes long and it holds the long until it reaches some other signal, and then it reverses and goes short, and it's constantly swapping from short to long, long to short over and over and over again. In theory, you can turn that into a long only strategy that just takes the entry with the buy signal and then sells that long position at the sell signal. So instead of reversing and going short, it just exits the position at the top. So then when the next buy signal comes in, you enter the long again. And when the sell signal comes in, it exits. So that is definitely something we support on TradesPost automatically for you. What you would do in your strategy subscription settings is just set it to bullish only. And that would mean that when you send a bullish entry signal, we would take the long. And then when you send a bearish sell signal, we would just exit the long. And it would always be long. It would never try to be short.
And I've seen people say stuff like, or do stuff like, they'll open up an account that allows shorting for somewhere else and have the shorting signals go over there and the long signals go to one account. Something that comes up again and again for people is they go, can I reverse it? If the strategy does a long and buys and sells, can I sell when it says buy and go long when it says short, they want to do the opposite. Like, yeah, just send the
Yeah.
message however you want. Send
Yep.
it on over to us.
Yeah, and I like the complexity of that. I mean, that's like a more sophisticated integration there, where you might have one connection that takes a long entry with the buy signal and then sells that long entry with the sell signal. But then you could have simultaneous alerts coming from that that are meant for your other account. So you connect a separate account that allows shorting, and then when the sell signal comes in, it opens the short, and it would buy to cover the short on the other side. So in theory, you could have these running at the same time, where the long account is always long and the short account is always short, and it's just swapping back and forth between those two accounts.
Right. All right. This is the feature request. Is there a way we can ask for a new feature? Given timing is important for the correct processing of incoming signals on your platform, and the fact that TradingView provides very little tools, features for managing timing, um, sequences, and delays, I would like to ask for a delay feature for incoming signals for all different types of actions. So this is another one of those requests that comes in every once in a while, where people would like us to be able to control the delay feature for the signal.
Yeah.
So I just want to mention that because we just we recognize we are getting that request, and
Yep.
that we understand that might be useful.
I'm going to go ahead and jot the note down for this. I want to confirm that we don't already have a ticket for it. Yeah, and I'm not seeing it. So I'll make a request here for John and I to cover this idea, to hold on entry. And I definitely think that's one that we could support, that should have some sort of timing function to it. The timing would have to expire first, and then the trade would be executed. And so obviously that could help with race conditions. It could even help with making sure all your entries or all of your exits are executed in a specific order. But we'll give some thought to it. It'd be nice if we knew the context for that particular individual to understand what they're really trying to accomplish. Because if the delay is to solve a problem of race conditions, we've got other solutions for that problem as well. Like letting you choose whether in the future, when we allow you to group trades together into a single message, you'll be given the option of executing them concurrently or in serial order. And what that means is that if you give them to us in a specific order, we'll execute them all in that order if you specify serial. But if you specify concurrent, then they'll all be executed at the same time or concurrently. So those options kind of give you this ability to not have to worry about delays. They'll just go in the order that they're given, and we'll make sure that execution is safe and in the right order. If the timing is needed to solve that problem, then it may not be worth even integrating, just waiting for that feature to come out. However, if there's another reason to delay it, I'd be curious what the context was. Did you get any sense of the context in that message?
No, no, that was the extent of what they were talking about. The idea
Okay.
here is that there are certain things that as as more and more people are using the platform, we're seeing that there's all kinds of these interesting setups and conditions that people want to set up, and they see TradersPost as the natural place to have that delineation. Like there's certain things that people ask for. It doesn't really make any sense for us to handle that on the signal side, or that's something for the broker to handle. But it seems to me to make a lot of sense that if we're they see us as the warehouse for their orders, their pending orders, that something like this would make a lot of sense.
It's the
Now,
right idea. I'd be curious about what the exact need is in that case, to see if there's a better solution than just delaying the trade. As engineers of this type of system, we're always interested in the best event driven way to solve the problem, not necessarily just introducing arbitrary timing to make things work, because it'll work until it doesn't, right? So like the solution is often more elegant than just adding a delay to it.
that's right. And if they want to you can imagine if something's queued in that way, now you need a whole new set of functions in order to cancel things and move things around.
Right.
And someone
Right.
goes, "Oh, well, you have this queue. Now I want to be able to move something up three levels in the queue for it to happen sooner." Okay, well,
Yeah.
Now we've opened up a whole
Now
other
I
can of
want a
worms.
Fibonacci delay sequence of seconds for each order that comes after, but only if the last one started with 5 seconds. Okay, now it's too complicated.
All right. Okay, so this is something that came in a couple of days ago. Hi there. I hope you can give me some advice. I'm using webhook alerts in a software called Momo Plus. So the idea here is that the message that comes from the system is not editable by the user. So they want to know, is it possible to send this message to Zapier, have Zapier make a modification to it, and then forward that message to us to then go ahead and actually execute the trade? Um, and I thought this was very interesting, and the sort of direction I want people to go in, where they go, okay, TradesPost is expecting a message from me. It's my job just to make sure that they get that message, and then poof, they'll take the baton and run with it, and they're not letting a limitation like, well, I don't have access to the code of this the software in order to do it. So I thought it was pretty interesting. Yes, absolutely. If the message is being sent, the signal is being sent, and you can modify that message in a way that's compatible for us, then yeah, once we get that message, we'll go ahead and execute the order inside your brokerage account. In this particular situation, I think the issue was that the service comes pre-built with like our integration with a particular broker, and they wanted to use interactive brokers instead. And so this would be a way for them to be able to solve that issue.
I see. Got it.
All right. Hello. I want to cancel my limit order and take profit and stop loss orders with the cancel signal below, but only the limit order is being canceled. What kind of message should I send to cancel all take profit and stop loss orders and the current position? So I just want to get clarification on this, on the cancel order from our documentation. Will it only cancel will it cancel everything to do with the bracket order, or only part of it?
It should be canceling all open orders for the given ticker.
Right.
Um, I would I would want to see that exact trade to see what happened there. I don't know if you're able to provide that from the ticket you picked
The,
this up from.
this came on Discord, and I believe Jonathan Ness was the one. No, sorry, Chris answered this user, and it looked like maybe there was a misunderstanding on their part as to actually what happened. Uh, that the position was already opened, and they wanted to cancel to flatten the position, but it wasn't flattening the position; it was just canceling an open order. So I just wanted to get
Okay.
clarification on this. That it would make sense that it would cancel the take profit and stop loss, but not flatten the position.
That is correct. If you send the cancel request for that any ticker, it will look up the position and then look for any open orders associated for that ticker and cancel those orders, regardless of what type they are. We while we have a connection to your order types because of the paper trail that's left from the orders, all we see in the open orders system is limit orders and that are just sitting there waiting to be filled. So those are the ones that we end up canceling. We don't know whether they were take profits or stop losses or anything like that. We just cancel all open orders for that ticker.
I see. All right, and my last question: would it be possible to monitor Jim Cramer's account on Twitter and send a signal to TradesPost to do a buy when he says to sell and to sell when he says to buy?
I mean, yeah, it's absolutely possible to do.
I thought this would be a fun thing to set up on Blueprint at some point, just to show that, just passing that through. And obviously, with me and AI, I'm always obsessed with it. Just to feed the tweet into an AI and go, "Hey, this is the documentation for TradesPost. I
Mhm.
want to do the opposite of what Jim Cramer is doing. Go ahead and send the message alert along." I think that'd be pretty fun.
There's some considerations to make here. So not only would you first have to glean whether it's a buy recommendation or a sell recommendation from Jim Cramer, but you would also have to confirm which symbol he's referring to. And I'm sure he's inconsistent in his tweets. So he might sometimes spell out the name of the company and other times might use the ticker. So then you would need to write something that actually looks that ticker up with some sort of database. Polygon would maybe be a good resource for that. Do a search for that ticker, confirm that that's the correct one, You don't want to make the Zoom mistake, right? Where you're not actually buying Zoom, you're buying some Chinese company, right? You're not buying the US web meeting conference call company. So knowing that you have the right company, I think would be the biggest hurdle of something like this. Then, of course, position size and risk management, that's a whole other step that would need to go into this. And then, yeah, at that point, if you know you have the right company, you've figured out the risks associated with it, and you know what you're doing, you could send off a signal to TradersPost for us to execute the trade. But most of that work is going to be on you. That is definitely not something that TradersPost builds. We're on the order execution side.
That's right. I constantly keep thinking of the Rube Goldberg machine of trading. I just love the idea that, because I can only follow a strategy that I've developed so long before I realize, hey, sometimes maybe me just randomly buying things will be just as good as me deliberately buying it. And I always wanted to set up something that's like, okay, every Tuesday at 3 o'clock, just buy some random thing, or every time this tweet happens, or whenever something is trending on Google Trends or whatever. But before, I didn't have now we have the capability of, I could just have something take a screenshot of my screen.
Mm-hmm.
I can have a macro that goes to the page, take a screenshot, feed that to the AI, and then the AI can figure it out. Whereas before, you'd have to use OCR, and then you'd have to like parse the text. And, like,
That is true. And I guess with Twitter's API, you can pull down the exact text, so you wouldn't even have to worry about an image with something like this. There's already a robust API in place to pull down the tweets of an individual account.
Right, but the Rube Goldberg machine has to be complicated, so we got to add as many steps.
Okay,
into
okay, gotcha. Well, then you may as well throw in the chart too and say, does this look like a good setup as well?
That's right. Hey, of course I could do that. Of course I could throw in the chart. That's perfect.
I would say that the idea of just like randomly selecting a company reminds me of the first time I ever even got introduced to trading stocks. It was actually in my economics class in high school, and our teacher asked us to pick a bunch of companies, and we would just paper trade them. We picked whatever the market price was at the time, and like I got to run through the whole paper trading process, and it was fascinating. I'm
Wow.
like 17, first introduction to all of this. And I picked, of course, like popular companies at the time. I think it was like Microsoft, and I liked Abercrombie and Fitch back then, so I bought some Abercrombie and Fitch. And what I remember discussing though in that class was this analogy of you could stick a chimpanzee in a room and have him throw darts at the Wall Street Journal and end up selecting a pretty decent basket of stocks, even just from that. And
Right.
and I took that to mean like it doesn't matter at the end of the day. You can just choose anything. Well, fast forward like 20 years, and I'm like, no. We're not just choosing any company. That's not the game we're playing here. It's got to be done with thorough research.
And for us, if we did that there, it would have been like what, right before the .com drop.
Yeah,
That
exactly.
would have been like terrible.
Oh, my Microsoft position would have blown up. There's no question.
My Cisco would not have been a good long.
Yeah, exactly.
All right, perfect. So we'll leave it there. Those are the questions we have for this week. We will be back next Tuesday for more office hours. In the meantime, you can always feel free to post your questions in the comments below on our YouTube videos, on Discord. Send us a message on support or on Intercom. Sorry, you wanted to...
I was just going to say, Joe reached out, asked if he could ask a question, but unfortunately we haven't heard back from him. So Joe, if you would like to reach out on support or ping us on Intercom on our dashboard on TradersPost, feel free. Otherwise, if we see the question here in the next couple seconds, we'll try to answer it for you.
So it's funny. Office hours is sort of like, we get the questions in, we all talk about it, and then after that, we talk about it more, and then we talk about it in a meeting, and then we talk about it on the show, and then we follow up. Hey, someone mentioned this. It's this whole making the sausage process where we really want to grind away in order to understand what you guys really, 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 really want.
Yeah, I mean, I actually, just to circle back, to give Joe a minute here to see if he has a question he wants to post. But earlier, thinking through this idea of one of our customers asking a support question, hey, is it okay if I offer feedback? I want to clarify, like, absolutely, please provide feedback all day long. We are a feedback-driven company. We take your feedback seriously. We want this product to be as valuable as possible for you. So by all means, offer your scrutiny, your concerns, your thoughts on how we can make this product better. But in some cases, when it comes to feature requests, we're always looking for ways in which we can provide not only an elegant solution, but one that's obviously going to apply to all of our customers. And we have a whole lot of people that are trading on our platform, so we want to make the feature as robust as possible. That might not necessarily look exactly the way you think it should, but it will certainly try to get as close as possible. Okay, so Joe's broadest question is brand new to us. Welcome, Joe. Appreciate you posting here. I have some indicators on TradingView and I want to automate them on Ninja. What's the usual delay between execution with buy and sell signals? All right, so let's unpack this. We don't actually support NinjaTrader. You should be aware that NinjaTrader bought Tradovate, and that integration is now all bundled together. So when you log in, you would actually just log in with your NinjaTrader credentials, but that would access a Tradovate account.
Did Tradovate buy NinjaTrader or NinjaTrader buy Tradovate?
I actually don't know what the parent structure is. I think it's one of those directions. I don't remember, but in any event, it's basically the same company. We support NinjaTrader, but not directly through their ecosystem. It's done through the Tradovate integration. So here's how the delays work. When your alert triggers on TradingView, there's a couple of milliseconds of delay on the TradingView side before it executes a request to send us a webhook. And that webhook is how we receive your trading message and then redirect it to your broker. So that time, there's that time right there, how long it takes TradingView to send us the signal. Then it's how much time it takes us to repackage your order and then turn that around to your broker in order to execute the trade. It's basically between 500 milliseconds and 2 seconds. It just depends on a lot of different factors. It takes TradingView about 500 milliseconds to 800 milliseconds, or 0.5 or 0.8 seconds, however you want to say that. It takes us about 10 to 15 milliseconds to package up your trade. And then it usually takes another 800 milliseconds or so, sometimes a little over a second, to get it off to your broker and get that trade into the market. So between half a second and up to 2 seconds.
What I've been telling everybody is, when my own people ask me, is that the TradingView side is the part where the TradingView side for the amount of time it takes, and the broker side, there's nothing we can really do about that. But that we optimize the heck out of the time that we have where we're managing your signal. And so, I mean, you'd be hard pressed to find people who are working day and night in order to make sure to shave off that time.
And this is, kind of our domain expertise. John has a background in enterprise grade software. I've got a background in building financial systems, under a subsidiary of S&P Global. We've got a strong background in API development. We're well aware of the context of like what's possible with receiving requests over the web, turning them around over to the broker. And we've done an enormous amount of work to keep it as fast as possible on our end. The delays in execution generally come down to how long it takes for TradingView to communicate with us and how long the brokers take to communicate the request. So, yep, Joe, you're nailing kind of the main point here, and we cover this in our documentation. This is not really a platform meant for fast multi-trades per second, or HFT in general. The timing it would take to execute each trade, not to mention the race conditions that would occur where you might get into positions in the wrong order, make this less than ideal for that kind of environment. It's better to do scalping when you're connected directly to the broker's pricing feed and you can, scalp right off the depth of market and do that in sort of a manual way. Automation gets pretty tough there. In general, for retail traders, we have time is really kind of our biggest enemy, and how long it takes to actually send signals over. So for a service like TradersPost, definitely scalping is not ideal.
Short-term scalping. If you want to do something for a few minutes.
Yeah. We're talking like less than a couple seconds, trying to turn trades over, very, very, very quickly. You'd want to be in a position with TradersPost for at least a few minutes per trade before this makes sense.
All right. Well, thank you so much, Joe.
Thank you so much, Joe. Appreciate you.
No problem. Excellent. So that's it for now. Like I said, we'll be back on Tuesday for more office hours. We'll be back this Thursday with Blueprint. I will be back on Friday for after hours. It's been a pleasure to serve you guys. See you soon.
Cheers, everyone.